The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
No, not Larry. I'm Kate Stalter, filling in for Larry today. I believe this is the last week I'll be doing this. It's been about the past month or so. I've been filling in on Wednesdays, and it's been just a great privilege. I really thank Tom O'Brien, the crew over at TFNN, and of course Larry for allowing me to host his show while he's been getting some R&R. Okay, what we have here today, very exciting day that I want to, I've got a little bit of news I want to break here on the show today, so we're going to have a lot of fun. And I also subscribe to a theory that goes along with Larry's tagline of trade what you see. That is absolutely what I do as well. In fact, it's fun. I was listening to Basil as I was getting ready to do this show, and he was talking about buying into strength. That is also a formula or a trend-following methodology that I also employ, and I'm going to be talking a lot about that today. So let's just take a look what we've got on the indexes. Looks like lower across the board right now. I put up a chart there for Intuitive Surgical, ISRG, and this is one of the this has just had a long history of being a growth leader, and it's just over the years has been a real favorite of growth investors. I'm looking at the chart right now. What you have here, let's see, back in the summer of last year, I'm going to put up a weekly chart for Intuitive Surgical to get this to show you what's going on here. So what we have here on a weekly chart, if you notice that you had that big the big pullback in the market last summer that we all well remember, okay? And you notice that ISRG, that's the ticker here, ISRG, did not really, actually it's back here that I'm looking at. There we go. Okay. You can't really tell. I've got a weekly chart up here. This stock held up much, much better than many of the other names in the broader market. Actually, I was right the first time. I'm pointing to 2010 over here, an earlier pullback. Yes, so back in 2011, Intuitive Surgical held up much better than the general indexes. That is frequently a sign of strength in a stock. Shows you that the institutional investors are continuing to hold shares. That's exactly the kind of stock that I like to track. I do track for relative strength. In other words, a stock's price performance as compared to the general indexes, the S&P 500 normally. You know, one of the things that really has given me encouragement over the years to use that strategy is the fact that has yielded a lot of big winners. I've talked many times about one big example of that did prove to be a big winner in my portfolio for quite some time was Green Mountain Coffee Roasters. I don't hold that stock at this time, but back emerging from the 2009, in March 2009, emerging from the bear, that's a stock I had tracked for quite some time. It had been showing better price strength compared to the general market, did end up being quite a market winner after that time. So Intuitive Surgical is another one that over the years has shown an excellent track record of earnings growth and of price strength, rallying to brand new highs today. You probably heard the news about the Catalyst acquisition, and it's not always the case that the acquirer rallies on the news. A lot of times they pull back, but today you are seeing that. So just wanted to point that out today. And here's what I want to do. I want to talk a little bit about what we've got going on today. That's some pretty special news. If you take a look at the homepage of TFNN, you'll notice that we have something that just went up there this morning about the Low Price Leaders newsletter that I am going to be rolling out. And that's obviously, or maybe not obviously, that's in tandem, if you haven't listened, that's in tandem with the show that I do here on TFNN every Tuesday and Thursday called the Small Cap Roundup. So we follow in that not only low price stocks, and what I mean by low price stocks is trading in the $5 to $12 range, because that can be very fertile ground. I just have a long history of avoiding penny stocks or really anything that's trading only $1 or $2. I know there can be some opportunity in that range. In fact, on the small cap show yesterday, I took a quick look at the chart for Sirius Satellite Radio. Why don't we go ahead and just put that up since I'm talking about it right here. Let's see, SIRI, one of my friends there in the chat room had brought that up. Now, this is not a bad chart. It's only trading at $2.24 right now, but this is not the kind of stock, until it gets to $5, it's not going to land on my screens. So that's why I'm really, the extra risk that's inherent in some of these small, very, very small stocks, low-priced, extremely low-priced stocks, that's not something I have found is frankly, a profitable, a lucrative strategy in my own portfolio. I do understand there are a lot of people who do trade that way. In fact, we had a CEO of a penny stock company come on the show about maybe a month or two ago, and it was interesting to hear from him because he did explain why it was that he chose that particular route to raise capital for his company, and it can make a lot of sense. It's just there is a lot of risk inherent for retail investors going into those. Also, they're not optionable at that level. That can affect trade as well. $5 to $12, I have just found over the years that can be a very profitable range. And also, a lot of times, let's see, I have a couple names. Anika Pharmaceutical. I want to put that up here. And let's see. Okay. ANIK is the ticker. You know, that's a stock that I had been in back when it was trading at around between 8 and 9 a share, I believe. It's rallied up to trading at about $16.26. I'm going to talk about that a little bit today as I go over what we are going to be doing here in that Low Price Leaders newsletter. But that's just an example. That's a very good current example of a stock that began life as trading in the single digits and is now right up there above $16. So really kind of moving more into the mainstream, as it were. And, you know, of course, we're going to be uncovering a lot of names that you probably have never heard about in some of these lower priced and smaller cap names. It's interesting because as part of the small cap roundup show, I interview a lot of asset managers, and we're going to be starting that up again next week. We're going to be bringing a few people on the show. And a lot of these guys, over and over again, one of the things you hear from the small cap investors is that these stocks don't get a lot of coverage from Wall Street. They're not always in front of the analysts. They're not always out there raising more equity capital, more debt financing. So therefore, they don't get the analyst coverage. They're not in the news all the time. And of course, the larger funds, those that are tracking some of these indexes, they're not going to be invested in these names. So they fly under the radar for a whole host of reasons. But nonetheless, they can be very profitable if you get in at the right time and are willing to abide by some trading rules to get out of there at the right time. And I have a few minutes here. After the next commercial break, we're going to start looking at some more of these charts of some of these lower price names that we're leading with this week. A lot of them, I want to just tell you a little bit about the methodology. A lot of them are fairly recent IPOs. I also track fundamentals, and I do talk quite a bit about being a trend follower. And normally, most of the time, frankly, I'm talking about the chart, but really the fundamental strength, earnings growth, sales growth, those are two of the very key trends that also determine whether the professional investors are attracted to any given name and are coming in there and buying up shares. So those fundamental trends are something else I scan for. So recent IPOs, fundamental strength. I look to buy stocks that are approaching new highs, or at least if they're not exactly at new highs or clearing new highs, are showing some technical indicators that they are on the way to rallying to new high prices. In other words, when you've got perhaps shorter term moving averages, when you've got, say, the 10-day average crossing above the 50-day line, that sort of thing, that's frequently a good indicator. Some of the pocket pivots that Gil Morales and Chris Katcher, who are a couple of friends of mine who are just terrific market analysts, that they have come up with in their book. I've mentioned their book many times on here, How to Trade Like an ONeill Disciple. Definitely recommend it because there's a lot of methodologies in there that are similar or identical to some of the ones I use here. I use price targets on these smaller stocks to take profits on the way up. Now, a lot of times what I'll do is have perhaps some kind of initial target after a buy, and then we can reevaluate at that point and see, okay, is the general market uptrend still intact? Is this particular stock, is its uptrend still intact? And you can base a decision at that point whether you want to take a little money off the table or whether it's really worth continuing to hold and reevaluate at your next target. Also adding to positions along the way. That could occasionally be appropriate, although I got to be honest, with a lot of these lower price stocks, particularly the very, very tiny names, you just don't ever want to get greedy. Risk management is the key with these things. And once you start to get greedy, it can really just get in the way of your being able to keep your gains. So a lot of times I really will just grab the gains at, say, 10% or so, 15% or so. In better market conditions, which we are not in right now, by the way, but in a stronger bull market, maybe you can look at 20, 25% gains. And that's particularly true of, say, the small caps that are not so low priced and not as thinly traded. When you have a stock that does have more liquidity, you can hang in there, I find, a little bit longer in a bull market. So that's really what we're looking at here. Also, in a poor market, there may not be any new buys. Wouldn't be unusual to see that at all. You know, it's funny because I have, over the years, I've gotten asked about stocks, some of the worst performers. I am all of my screens, every single screen that I run is based on technical and fundamental strength. And people ask me a lot of times to show them some of the bad performers. Frankly, I don't screen for those. I don't screen for stocks that are reaching new lows or falling in heavy volume or show poor fundamentals. So that's not something that's on my radar on a regular basis. Okay, so we're coming to the first break here. After this break, we'll start looking at some of these low price stocks in the leaders, in the Low Price Leaders newsletter. Hang in there. I'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. Prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
All right, welcome back. I'm Kate Stalter. I'm filling in for Larry today on Trade What You See and breaking some big news here in TFNN land. What we have, if you go to the homepage of TFNN.com, and you will see that you can download for free, learn more about the first edition of the Low Price Leaders newsletter. And we're looking at publishing this every Wednesday, and it'll be like end of market. We're a little early on it today, just being the first edition. Why not? But generally, it will be end of day on Wednesday, end of the market day. So take a look at that. I'm going to go over some of the stocks today that we're looking at in this first edition and just explain to you what the methodology is, what some of the names are, and trust me, there are a lot of unfamiliar names on here. A few you may have heard of, but mostly just a whole host of names that don't get all the attention while the major media is focusing on Apple or Warren Buffett's health. And, not to thoughts and prayers going out to Mr. Buffett that he does make a full recovery, but it is just interesting to me that there's just a whole lot of attention in the financial media going to that particular issue today. Just I guess where the financial media meets People magazine is almost what it is, because I guess he is a celebrity. And let's see here. Let me get out the phone number. Give a call. We can talk about small caps. low price stock. Since it's Larry's show, we can talk about other names if you want. 877-927-6648 is the phone number. So I want to start out today with a look at a stock. The ticker is INOD, Innodata ISAGEN. And I kind of made one of my little corny jokes here in the Low Price Leaders newsletter. You can expect some of those. You can expect some corny jokes in there. Maybe I'll even venture into not corny at some point. Who knows? But to me, this company sort of sounded like it was a biotech. Innodata ISAGEN. Doesn't that sound like a biotech? But it's not. It's they provide services, IT services, information services. Not really an IT outsourcer. They provide just a lot of various processes to publishing companies, media companies, government agencies. Now, what really caught my attention over here is this little chart formation that it's currently crafting right here. That's actually pretty good. That looks like it's pretty constructive. Let's see, it's holding above resistance, the low at about 466, and it is right now just barely above that $5 level to about $5.33. That's actually fine. So it's holding in that range. You'd be looking at a buy point right now, could be about 624. That could always change, though. That could always change, because just depending on how the chart formation does take shape, if it does, for example, end up forming a little handle area or pulling back again with, say, another leg down that undercuts the previous leg down, you might have another buy point that actually turns out to be earlier than 624. Or, as I was mentioning, if you have some kind of pocket pivot that does take shape. So this is something to watch. This is an interesting stock right now. They are, let's see, they had a yearly loss in 2010 and then rebounded again with earnings last year, expected to show earnings per share of 23 cents this year. That would be almost a 30% increase over the prior year. So some good fundamentals there. And just to reiterate something, I say this in just about every show, because I am such an advocate of watching what is actually on the charts, what the company actually is reporting. Nonetheless, I do pay some attention to the earnings estimates, just because that shows you what the institutions, what degree of confidence the institutions have in a stock at any given time. That can always change. But, don't forget, we're not looking at these things as, 20-year buy and hold plays, okay? These are trades. You want to know the level of confidence the institutions have at any given moment. And, this is thin, so there's really not a whole lot of institutional ownership. About 40 or so U.S.-based hedge funds and mutual funds. Let's see, market cap, $129 million. Moves about 59,000 shares a day. So that's the kind of thing we're talking about on the low price list. Let me move on. I've got let's see. Actually, it looks like this segment's about to wind down. So we'll come back. We'll talk a little bit about some regional banks, because that's an interesting little subsector of the finance sector, and that has been pretty productive. Those are correcting right now. I want to say a little bit more about that. 877-927-6648. Give a call. I'm Kate Stalter. I'll be right back.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back. I'm Kate Stalter, sitting in for Larry today. I believe he will be back next week. Now, of course, if you've been listening to the first half of the show, the big news that I'm excited about today, and I hope you are too, is we've got the Low Price Leaders newsletter. Check out the homepage of TFNN.com. You can get more information about this. We'll be doing a free trial for a couple weeks here, just to let everybody sample this and see what's going on. So I have up there one of these lower price stocks trading right now at about $6.21. This is Regions Financial, RF, Birmingham, Alabama bank. Let's see, it's a holding company for a number, about 1,000 branches throughout the Southeast and the Midwest. So not really such a puny company, in terms of their operations. This is actually a mid-cap, and you will find a lot of the lower price stocks that are the mid-caps. Well, heck, never mind. You've got Citigroup out there, right? That was, what am I saying? B of A, Bank of America, that was, let's see. I'm just having a little fun here. Yeah. Okay. You've got Bank of America that's trading at $8.93. I got to say, B of A is actually a pretty nice chart right now. But I want to come back to Regions Financial that I've got up there. Ticker is RF. Now, what's interesting about a lot of these smaller regional banks is that they, even though they're in a quite different line of business than something, for example, that is like a Bank of America or a Citigroup, they often suffer along with the broader market's lack of confidence on days when those bigger banks get traded lower. And, of course, the flip side is they can often get traded higher. It's just sort of like, I think there are some just baskets of the entire sector out there that can kind of ebb and flow in tandem. But nonetheless, you do also see times when you do notice that the actual investors and traders are in there making judgments and making evaluations of the regional banks, and they can, as a subsector, show a whole lot more strength at times than the bigger names. So that's why they're worth looking at separately. So I've got a daily chart of regions up there right now. Let's see, somebody's writing me, big presence in Florida. Yeah, I thought I had seen them when I've been down there. I thought I had, that the name did seem to ring a bell. So, so I've got a chart of this in front of you right now, a daily chart on Tiger TV. You can see where it's holding very nicely above the 50-day line. Simple moving averages are one of the key indicators that I typically use. That is just historically, if you go back and you look at chart after chart after chart, going back for decades, simple moving averages are a very reliable indicator of institutional support that shows you when the professional owners are holding shares and when they might be prepared to buy some more. Often, and we've talked to some of the fund managers who have been guests on the Small Cap Show who come in, they confirm they will come in there as a stock they own is dipping lower, getting some support there. They will come in there and buy some more shares, gives them an opportunity to bolster their position at a lower price. So works out nicely for everybody. For individual investors, that can be an area that you watch. Now, of course, the caveat that I always will be issuing is, and I mentioned this earlier, in a market correction, weak market conditions, it just does make it riskier. We've got, as we've seen lately, you've seen a lot of this indecision, the mood swings in the market have reappeared in recent weeks. A lot more attention now going back on the VIX, the fear index. So just keep that in mind. It's not to say there can never be buy opportunities in a down market. This particular one, though, I don't see any need to rush into it. It's getting support at that 50-day line. It's got some ground to cover before it rallies higher back to that previous high price that was back in there. I'm kind of indicating that on Tiger TV. Let's see. That would be actually $6.69. is what you'd be looking for there. So it is, it's got a little work to do before it regains that. No reason to jump into this one quickly. This is just something to watch. You might find a lot of times in some of these names, I might be watching them for weeks or months. And I know that gets kind of difficult. That can be like, oh, what's happening here? But that's just the way it works. Sometimes some of these things, they trend along their moving averages for a few months. The market maybe does not do anything. It just patience. I think I wrote this in the Tiger Den yesterday, the Jesse Livermore quote, just about the money being made in the sitting. I think there's a lot of different ways to interpret that. But one way certainly is just being patient, waiting for the right buy point, not getting in too soon, particularly when the market may not be really supporting a buy position. So let's see here. I'm going to put up another one here. WAL. I looked at this on the show yesterday. I want to show you this again today because this is one of these that I am tracking on the watch list right now. Western Alliance Bancorp in, I'll try to say it right, Nevada, Arizona, I believe maybe parts of California they might be in as well. It's a Phoenix-based company. So this one here, very, very nice history of earnings growth, good estimates ahead, and you're seeing the very same thing that we just looked at on regional. Regions Finance, rather, you're seeing this nice support along that 50-day average. I mean, you can't deny that is I can't anyway, it's a sign of strength, showing you that the owners of this stock do continue to have confidence. Maybe there's been a bit of profit taking. Let's see. This has a market cap of about $719 million right now. Not bad liquidity for a small name. About 390,000 shares traded a day on average. And you've got more than 200 U.S.-based hedge funds and mutual funds that are holding shares in this stock right now. So not bad. This one has gotten some decent institutional attention, and just looking at the estimates, it does look like they continue to have confidence. Okay, this one, I can't neglect to mention this. This one reports earnings, let's see, what is today's date? Today's the 18th, the 19th. So they report earnings tomorrow. So I really, generally speaking, don't like to jump in ahead of the report, especially in this market. I mean, you just see, stocks can get punished based on the report, even if there's just some little thing in there that, a company can beat views, but maybe there's something in the report having to do, say, with greater competition, or particularly in the financial sector, a lot to do with the loan ratios that just, you can really get hurt on one of these. So this is another example. It just looks to me like there is some wiggle room to wait on this particular name, because you do have some ground to make up to before it regains the prior high right over here. You'd be looking at $9.20 as your prior high, and there could be a way to get into this sooner as well. Again, market conditions playing a role. We are in a correction. That looks like it will remain the case as of tomorrow as well. But it'll be interesting to see what happens on this particular name based on the earnings, and I'll know a little better about what kind of decision I would make about potentially adding this one after tomorrow. So let's see here. We have, let me show you, this is a really interesting one. And I've been tracking this one for quite some time. And this is actually in buy range at this very moment. This is Omnova Solutions. OMN is the ticker. Market cap, $335 million. Moves about 190,000 shares a day. I'm going to put this on a weekly chart. You can kind of see there on the daily how it's moving up today. And of course, again, just to come back to the comment about the market conditions do play a role, but this is the kind of thing that I am going to take a look at a little bit later today after I get done with the show, just determine how I want to handle this. It did clear its prior high, $7.31. Its high today, $7.42. Absolutely in buy range. So this is interesting. You can see you've had some higher lows in recent weeks right over here. So that's a nice uptrend. Hasn't broken that trend yet. As always, you get a little trend higher. Not surprising to see a pullback in there. In fact, there has been some research done to show that of stocks that go on and clear a buy point, almost half of them actually end up retreating and kind of just rallying a little bit and then retreating back to that buy point again. Now, obviously, if a stock falls, some percentage, maybe 10% or so for these smaller, maybe more volatile stocks, you want to give them a little more room to run on occasion. But if a stock falls about 10% or so from that buy point, then you want to just get out, cut your losses. It might not be the right time, even if the fundamentals just look terrific, even if the chart has behaved well so far. There's no reason to wait and, wait around and see what if it falls further. And you could be putting your money into something else in the meantime, or just protecting it in cash at the very least. So this one here, this one doesn't report for a couple more months, actually, not till the end of June. So you're not going to have earnings as the catalyst on this particular name for quite some time. I don't think I mentioned what this company does. It's kind of a weird little business. They make chemical coatings for floor coverings and paper. So, again, it's not one of those very glamorous, high-profile industries that you're going to be hearing a lot about. Definitely not something that's going to come to the attention in a lot of the media. But it is often surprising to me when I do talk to these fund managers and you do hear some of these names that they have. And, of course, you can go back in and research which funds own them. But sometimes people do bring up names that I hadn't been aware that I hadn't looked up their holdings to see. So kind of interesting. I like this stock a lot right now, and I will very likely have an update on this one, if not today, then tomorrow. So let's see here. I want to move on. I've got a few more minutes here. So many stocks, so little time, right? That's always the way. Okay, here's another very interesting one, and I've been surprised, frankly, that this hasn't gotten a whole lot more attention than it has, because it's been on my screens for quite some time. It's called Arabian American Development. Interesting name. It's in the energy sector. And I was just kind of surprised it hadn't gotten more attention, because energy sector names are something that do get a lot of more mainstream financial ink, but this one is not, and it is low priced. It's a small company, so I guess really no surprise there. Market cap of only $252 million, trades only 62,000 shares. So, that tells you something. And they make petrochemical products, and they're a property developer. They have operations around the world. Here in the U.S., they're based in Texas. They also have operations in Saudi Arabia, as well as, I believe, in perhaps some European locations. Now, this one, let me show you what's happening on this particular stock. It cleared an area of consolidation, okay? So it's just kind of hovering near its high right now. Let's see. It rallied to a high of $10.90 just last week. It's actually, let me see here. Right now, it's at about $10.67. I'm just kind of watching what this little pullback is doing right here at the moment. This is another one. I'd actually kind of like to see this maybe consolidate a little bit longer. If it does go on and zip past or approach that old high of 10.95 in the next couple of days, it could offer a buy opportunity, and I may decide to take a small position in this one. Very interesting company. Let me just see here. So they report earnings next month, May 3rd. So that's just something to keep in mind. But this has been a very strong performer lately, and definitely like this name. Let's see. I think this segment is winding down here. I showed you Onica Pharmaceuticals in the previous segment. Let me go here. Actually, when we come back after this break, I've got a couple more stocks. We'll move on to some of the smaller cap names. See, didn't I tell you? Whole bunch of things, whole bunch of companies maybe that were unfamiliar to a lot of folks, and that's the fun of this, some of these undiscovered gems. I'm Kate Stalter, sitting in for Larry. We're talking about low price leaders. Be right back after this break.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, last segment of the show, as usual, just these fly by. Kate Stalter filling in for Larry today, and we are taking a look today at the Low Price Leaders newsletter. Check out the homepage of TFNN.com, and you can get a little bit more information about this brand new newsletter. Very excited about launching this today. Not only are lower price names between $5 and $12 featured in there, but also just a number of small caps, because we do the small cap roundup show here every Tuesday and Thursday at, 11 a.m. Eastern. I'm in the Mountain Time Zone, so I always have to do a little time zone math in my head there. Okay, so I'm put up a chart, RGR Storm Ruger, and this is, I mentioned before the break that some of these names that we'll be looking at on here will be familiar. This is a stock that actually, as it's climbed higher in recent months, it really has gotten quite a bit of attention. The gun maker, of course, a lot of speculation as to what the reasons for that might be. Not going to go there. But nonetheless, just looking at the stock, just looking at the company's history of sales growth, earnings growth, really it's been stellar in recent quarters. Wall Street expecting 29% earnings growth this year to $2.70. Now, here's something interesting. They're expecting earnings growth in 2013, but only 6%. So I don't know if that's reflecting that the analysts are expecting some other change that's going to be happening in 2013 that would affect that. I don't know. Maybe just they feel like the market might be saturated by that time. It's probably something like that. I have not read the analyst reports, but kind of interesting. So pulling back right now, let me see here. I've got a weekly chart. I want to show you a daily chart of this particular name. I like the consolidation in this right now. It's pulling back, getting support above the 50-day line, and just kind of holding beneath that previous high of, let's see, it looks like that was $53.29 was the prior high there that we were looking at before the pullback. This has continually gotten support along that 50-day line. See? You can see that, where institutions have just continued to have confidence in this particular name. So just some nice action in this one, watching the stock right now. Just kind of keeping this on a watch list for the moment. Okay, this is one. Again, it reports earnings April 26th, so that would be next week. So we'll keep an eye on this. I'm sure this is one that I will be talking about again on the Small Cap Show. It's got a market capitalization of $955 million, moves about 360,000 shares a day, so not bad liquidity there. Let's see. I've got another minute or so here. Let me show you another one. This is, I like the ticker on this one, Fire. We went from guns, now we got Fire. Okay. This is Sourcefire. F-I-R-E is the ticker on this particular stock. Now, Sourcefire is a network security company based in Maryland, market cap of about $1.5 billion. Very good liquidity on this one, about 670,000 shares a day. I've got it on a daily. I want to show you a weekly chart for Sourcefire, and you'll really get the sense of what I'm liking about this. See that nice tight trading range lately? The company reports earnings early next month, so this is another one just to keep an eye on, and I may have a little update on whether or not this has reached a buy point as well. Okay, I'm Kate Stalter. Check out the newsletter, Low Price Leaders. I will be back tomorrow with the Small Cap Roundup here at 11 a.m. Eastern. Thank you so much for listening, and thanks to Larry and Tom for letting me sit in past few weeks.